But first of all, welcome to everybody. Thank you for joining today. We're very excited to roll out this new partnership that we've established with Charlie's firm. And as many of you know, we don't establish that many partnerships like this that often. And I think the reason why I highlight that is when we bring something to clients, we really want to make sure that it's going to be useful and valuable to them. And just kind of going back to the origin story of how this came about, Kate, I was just thinking the other day, it was actually almost a year to the day. I was visiting my parents with my wife, and I was on a walk, and I sat in on like an hour-long webinar that Kate hosted. She was invited by Schwab to talk about this property and casualty insurance. And I think more importantly, what they were getting at was really risk management as it pertained to wealthy families. And what really stood out to me as part of that experience was just some of the storytelling that Kate was doing as part of that presentation. And some of the things that Kate had highlighted, and being in Florida at the time, and we have some clients that have homes in Florida, was just, natural disasters that have been occurring in California and Florida. It seems more so than the historic norm over the last couple of years. And a lot of people just asking themselves, how do I deal with insurance? It's getting extremely expensive to have policies. Obviously, states like those are being affected. People's homes are being affected. They're having homes that they've had for family vacations being ruined. And they're just wondering, how do I approach this? Because it seems like the insurance I've had maybe wasn't enough to protect what I needed. At the same time, it's becoming extremely expensive to keep these policies in place. Another thing that Kate highlighted was just, we've seen this tremendous growth in wealth over the last 15 years as the market has done very, very well. And there's a lot of people, and a lot of our clients fit this bill, that have more wealth now than they thought that they would ever have. And what goes along with that, when she was talking about insurance, was this idea of umbrella insurance, this idea of, hey, maybe I've got homeowners and car insurance. But if something happens on my property, we live in an extremely litigious society today. And one thing Kate was highlighting was how underinsured people are as it relates to their umbrella insurance. And a lot of it just has to do with people whose wealth has grown significantly, who maybe had umbrella insurance in place, who are just now saying, you know what, I don't think I need any more coverage. This coverage has always been really good for me and my family. And yet their wealth maybe has doubled or tripled over the last 10 or 15 years. So a lot of that really hit home with me. And I had thought about, we're getting some of these questions from our clients, people that live in Florida asking us. I remember one gentleman candidly saying, I'm wondering whether I should have insurance at all. I was calculating how much it would cost me to rebuild part of my property versus how much it was costing me for my insurance. And people just asking us about, I'm just not thrilled with the broker that I have. Maybe it's with one of these bigger firms, and they're not sure, should I be bundling my policies with one company? How often should they be reaching out to me? So we're hearing about this from clients. And so what that led me to do was really just to reach out and contact Kate and just say, hey, this is something that seems to be very important to our clients. And it's something our firm hasn't really covered in depth in the past for people. And so one thing I talked to Kate about is, is this difficult for McCabe to do in-house, or is this something we should be outsourcing to someone like Kate? And in talking with her, it became very apparent that can be a very complex animal to tackle. And so doing this in-house for McCabe would be something that would be a big undertaking. And really, it's part of why there's people like Kate and Charlie who have really made a career on specializing in this area. And so in talking with Kate, it became very apparent to me that this is something that McCabe wants to outsource and tackle for our clients at the same time. And one thing I will highlight, I've talked to Kate, and she really specializes in working. I believe the term you used, Kate, is the diamond sandbox of, really wealthy families who have 50 or $100 million. And we talked about, we may have some clients like that, but the bulk of our clients maybe don't fit that bill. And what Kate had highlighted to me was, well, I also work as a consultant for firms like McCabe, where I can go out and fit you with the best firm that really works day in and day out with the clients that McCabe serves. And really what McCabe is, we invested in that. And, what we've decided is, and I highlight this not to pat ourselves on the back, but just to highlight the importance of it. McCabe invested a good amount of money with Kate to go out and go through this process over the last year to find what we think is going to be a really great fit for our clients. Knowing that people that put policies in place or, tweak the policies they have, McCabe's not going to be compensated for that. And so again, I highlight that just to say, if McCabe is investing in this and yet they know it's not going to be something that's going to be, moneymaker for their firm, it must be really important. And so, with that, all that being said, Kate, I thought I might turn it over to you for a couple of minutes just to kind of talk through the process we went through last year, because I think people will find it insightful of, what was the legwork that went into George deciding that they wanted to cover this for their firm and ultimately starting this partnership with Charlie's firm. So, if you can give our clients some comments on kind of the different steps we went through, I think that will be helpful in kind of highlighting what went on behind the scenes.
Yeah, absolutely. I think, the first thing was figuring out how did McCabe and the organization want to think about managing full-on balance sheet risk for the clients, right? So it was that, do we do it in-house? Do we outsource it? And it became pretty clear early on that the best path was outsourcing. So with that, we said, okay, how do we go about finding the best partner? Well, to find the best partner, I needed to understand who the McCabe clients were. So what does a McCabe client look like? Where are the families located? I like to say, I'm a kid from the South Side. I grew up in Palos Heights. So as I started talking to Tim and George and the other advisors, it was as if I was talking to people I have known my entire life. And as everyone in the firm described their clients, the background of the client, each and every one of your clients, I could relate to somebody I knew or somebody I grew up with. And I was thinking about, what did they need? What were their needs and expectations today? And what did I see kind of in the future for that family or those families? And what were their needs going to be kind of going forward 5 years from now, 10 years from now, 20 years from now? Because risk management isn't something static that you do and you put in the drawer. It continually evolves. So once I understood kind of what the needs were, and the needs vary, the clients aren't all the same. They're not all homogenous. They don't all have houses in one area. So we had to really identify who were the brokers that could work in this space. And when we say insurance broker, we're talking about a firm that could work with a family with $1 million and work with a family with $50 million. Well, not every firm can do that and do it well and do it at the same level of service and the same level of high touch and provide the client across the entire spectrum with picking up the phone and answering the question. And so in a prior life, I had worked on the company side, meaning I had worked for Chubb Insurance. And at Chubb, there were 3,500 agencies appointed to sell Chubb product directly. There aren't 3,500 agencies that can work across the spectrum of client and do it well with the right level of service. So I narrowed down that field of who are the right brokers. We ended up sending out an RFP, a request for proposal, to 7 agencies that I felt had the right balance of service that could work with that $1 million family and growing and the $50 million family and growing. And we sent it out. We received the responses back. And immediately the group kind of separated itself into 2 buckets. So we had, 4 on the bottom, 3 on the top. And then out of those 3 on the top, there were still really 2 on the top that mattered. In between the 2 on the top, I had a feeling where we were going to land. Now, I will tell you, I'm a professional insurance broker matchmaker to the client. I have done this a very long time, and I get a feeling for what clients need with the right broker. So we ended up interviewing the top 2. George and Tim were on the call with both brokers, and the calls were exhaustive. And we didn't just have the one person from the firm. We had one person from the firm and the service team members, because we wanted to know who was going to pick up the phone when a McCabe client called. And we did both those calls. And after each call, we did a debrief, George and I. And we were quick to figure out that this decision was not going to be easy. However, it became very clear to us that the team of Charlie and his team at Epic, they just had this certain synergy with McCabe and how McCabe did things. It was a very aligned client service model that you couldn't have scripted this. And I didn't realize how aligned the client service models were between the two firms until we were in those dialogue meetings after. And so to me, it was kind of finding those needles in the haystack, but there was just something about both Charlie and George. It was kind of like, of course you guys have to work together. You have to. And I feel like, you have such similar clients. It was a match made. So that's kind of my
I'll give a couple more comments, just specifically if people are wondering, well, what did McCabe see specifically that really spoke to them about Charlie's firm? A couple of things. One, just in terms of structure and culture, and I'm sure Charlie will get into his family firm has been around for a number of generations, and being a second generation owner of the firm, I think what that spoke to me about was, hey, this is an important area, financially that Charlie's family has covered for families for decades. And what's really important about that is just knowing, that clients are going to be taken care of across generations, or at least that there's a game plan of, hey, we're going to make sure we have these resources here so that we don't just leave your family, high and dry, come a generation later when someone retires. Tim and I went through a similar experience with how we structured our firm. That was important. What's also really important about a firm like Charlie's is that they're independent. And again, that was very similar to how our firm is structured, in that Charlie doesn't work for a specific insurance firm. He's not selling a specific type of product, I'll name State Farm as an example. Charlie doesn't work for a State Farm where it's, hey, I'm only selling State Farm products. That speaks to a company like McCabe, who deals with investments when we decide between the different investment companies your family can use. We love when people are independent and unbiased. Another thing that spoke to us was just, they're locally owned, they're Chicago based, and we have a lot of our clients that they're okay doing things, online, and they like to have that capability if they're on vacation or whatever, but they do like to be able to possibly see people in person and know that the firm that they work with is within arm's reach. At the same time, a lot of our wealthier clients may have homes in multiple states. Charlie, similar to our firm, has a partnership with this Epic Insurance that has national reach. So it's kind of nice to have the best of both worlds there, where it's like, hey, they're locally owned, but they've got national reach to help our clients all over the country. And I think the biggest thing to us was that Charlie's firm has a dedicated review process, which I know Charlie will go into later. But just the main thing we would hear from clients is, I got my insurance needs in place, and then I never heard from my broker again, or I'd hear from them like every 5 or 10 years. And we found that to be really important when Charlie had mentioned, hey, one thing that's important to us is that we try to reach out, annually, and just as a check-in to say, hey, what has changed? Your review date of your policies is coming up. That we knew was going to, really speak to our clients, because our clients, they like to review things, or at least to be offered to review things, right? And just make sure that whoever their professional is that they're working with, the knowledge that they're on top of it. So I just wanted to give a couple of those, specifics of how we landed on Charlie's firm. And, maybe with that, Charlie, I'll kind of turn it over to you to maybe go into some more specifics about your firm and, some of the more specifics around the planning that, you and I have been talking about doing for some of our clients.
Yeah, well, George, thank you so much. Kate, thank you so much. It's a big honor to have been awarded the opportunity to work with all the McCabe families and clients. I just want to start off by saying, I'm not here to sell anybody insurance. I'm here to be a resource for any of the McCabe clients that have questions or concerns, want to do a review. It's what I do, and I'm very appreciative. And I really want to just reiterate everything Kate and George said about what a good match we seem to be. Our values originally a family-run agency founded in Chicago in 1873. I got in the business in 2008, and I worked with my dad, who still is my business partner. The legacy firm Phillips Brothers was a 150-year-old business, and we were acquired back in September of 2024 by a wonderful shop named Epic that we selected because their values were so aligned with our values and the resources they provided us and our clients we felt were invaluable. I was an attorney straight from school, went to Emory Law School, practiced law for a few years in Chicago before joining our family practice. That background is a bit unique in this space. And essentially, when you purchase insurance, you're buying a contract. And having a background as an attorney has proven very invaluable in this industry because when there's claims, when there's issues, when there's problems, having someone who understands the language, understands the form, and can speak that language to the underwriters and to the claims adjusters has been very helpful. So we kind of had a discussion about how to make this introduction and what might be interesting for the McCabe clients. We brainstormed and kind of came up with, just kind of, other than just who we are, just some interesting things to consider about this personal insurance space, which has really changed a lot over the last 15 and 20 years. It used to be something that I think most clients would kind of purchase and kind of set it and forget it, to steal that line from the infomercial. And I think because of inflation and changing weather patterns and what George referenced and Kate referenced with the increase in wealth, it's become a lot more nuanced and a lot more complicated. And having an advisor that you really know and trust and paying more attention to has become more and more important. Just like you might have a family attorney or a family accountant, someone that you have a relationship with and know and trust, having someone, and obviously a wealth advisor that you know and trust, having someone on your personal insurance has become something that's very important as well, and something you guys should all consider. So I'll jump right in. I'll keep it a little bit brief because there's only so many minutes that people can pay attention to an insurance presentation. So let me share this here, and hopefully everyone can see it okay.
And I will mention, Charlie, just as you're pulling that up, there is a Q&A feature that should be at the bottom of your Zoom. If you have questions as Charlie is going along, and we'll leave time at the end for any outstanding questions, feel free to type them in. And because we want this to be as interactive as possible and get your questions answered as Charlie is talking about some of these items. So sorry, Charlie, I'll pass it over to you.
Yeah, no problem. George, I just want to make sure everyone can see it okay. It looks good on your screen here. Great. So the first thing I wanted to cover very briefly is something that George kind of hit on, this concept of the captive marketplace versus the independent channel. Epic, which is a wonderful firm, and I'll cover some of the things that we provide, is an independent broker. A lot of the companies you probably worked with in the past or thought of as a quality carrier, the State Farms, the Allstates of the world, the Farmers, they're what's known as the captive market. And the captive market is a wonderful channel of insurance, but it's typically for homes under $1 million of replacement cost. And I think a lot of families get comfortable and start their pathway in their life with one of those firms, and they sort of outgrow it without realizing it. One of the big differences is that if you're a State Farm agent, for example, you are an employee of State Farm, you represent State Farm, there's no one else you can market your product with, and if there's a problem, you're kind of stuck with that as your only option. What kind of leverage could you really have when you only really have one option? So the independent channel, we represent lots of really high quality carriers that specialize in insurance across every state, that specialize in insurance for high net worth clients, homes, $1 million and up, obviously they go much higher. They can handle complex risks in Florida and Wyoming and all the states that have some weather issues. But most importantly, I think, is the relationship you have with your broker, because we represent you. So I work for you. I don't work for the insurance company. I go to Chubb, I go to Pure, I go to Berkeley One, I go to AIG, Vault, Cincinnati. There's a host of really wonderful options and carriers. And I have them compete for the opportunity to work with you and make sure that you get the best results. And further, if there's a claim or a problem, we have a lot of leverage because these companies know if they don't act honorably, we can move all of our enormous book of business. We have millions of dollars at Epic with each carrier, tens of millions and more. And it just creates a situation where we can really represent you instead of you kind of being at the whim of some of these insurance companies. So when we picked Epic, a lot of companies were trying to work with us. There was a couple really big key pieces, and I'll kind of jump ahead and then come back briefly. But one of the key pieces that I wanted to talk about was the vertical expertise. That's something that's become very important due to the weather changes and challenges in the property marketplace that we'll cover a little bit later. But specific to Epic, we have a dedicated California group, a dedicated Florida group, a dedicated group that does nothing but insurance for boats, insurance for international. We have a group that does nothing but claims. And having that at our fingertips is a very powerful and helpful trait and quality, and something that filters down to our clients. So we get best in class results. We're able to provide, local boots on the ground to make sure that our clients are getting the best underwriting, the best pricing, the best coverages, all that sort of things. Have dedicated claims is obviously a huge thing. So these are all sort of free resources included. And when we were a smaller family agency, we were very good, but you obviously can't have the detailed expertise in every single vertical that you can get with a company like Epic. So being infused with these resources has been very, very helpful. There's certain things we do too for our clients, replacement cost analysis, the idea that you have to insure your home for what it would cost to rebuild it, not what it would cost to sell it or what it's worth in the marketplace, is a big concept we spend a lot of time working on. Really working with our families to ensure that as their net worth has grown, we shift the focus of what we're kind of doing here to focus on the catastrophic type losses. A lot of people, without realizing, have their insurance set up from a long time ago when they were worried about a $5,000 or $10,000 water claim in their basement, or a little modest fender bender. We really spend time with our clients to make sure we're insuring for the huge loss, the umbrella claim, the big liability claim, the massive flood loss, water claim. And we use tools like risk sharing and high deductibles to make sure that we keep the cost down while making sure that our clients are protected where they really need it. So if your nanny's driving the car and crashes and there's a big incident, your kid has a party in your house, and a child's underserved, or a big hurricane claim. So those are the kind of things we really focus our attention and time to protect our clients with. And lastly, umbrella benchmarking is something that George and Kate kind of hinted on. As your wealth has grown, you become a bigger target for litigation, and making sure that we have this properly benchmarked and you have the proper coverage if you're sued for bodily injury, property damage, exposures in your personal life, that you have adequate coverage. It's not expensive. I think many of you would be surprised to find out what a $10 or $20 million umbrella would cost, how cheap it is relative to the exposure. And that becomes really the focal point of most of our presentations, is covering the large what ifs and making sure that you're properly protected for those things. Obviously, making sure you have all your entities added. It's a common mistake we see. A lot of people, as they grow their wealth, have estate planning and they've added LLCs and trusts. Kind of making sure all that is included is a big part of what any broker should be doing for you, and something that you cover in these annual reviews that we'd be doing. Because even over the course of a year, things change. You rent properties, you go on vacation, you sell cars, add jewelry, and constantly need to be in communication with your broker. And frankly, that's why having a strong relationship with the broker is so important, is to manage these things as the year is going on. Your life isn't static. It doesn't start and stop at the renewal date of your policies, and making sure you have this, prompt service, excellent teams. And that's something that I guess I should cover too very quickly, is we have a wonderful team. It's primarily the employees that worked with me at my small family agency. We take customer service very seriously, and, have the verticalization to handle all the different McCabe clients in the way that Kate and George felt was important, and was something we were very aligned on. I'll just keep going through to keep it quick, unless George or Kate have any, thoughts or questions so far.
The only thing is just a couple of things. Yeah, Charlie, I was going to hit on the same thing. And I think you have different team members that specialize on different client groups. I know Liliana, I think, specializes more the private client at a certain wealth space. I don't know if it's $5-10 million, what it is. And then you have a separate team member that really handles kind of the more, maybe $500,000, $1 million family with one home. So I think in a sense, that's a good thing in that they really focus on one type of client. So they really have their system down pat by the time you get to them.
Yeah, and I think it's also important to know that any, person that's referred or wants to meet with us is going to have a dedicated person. It's not going to be, like a call center experience, even if it's a smaller, profile. We take our relationships very seriously, and we have a wonderful team, and obviously George and Kate vetted them and met with them. And that's something that was it's always been very important to me, is making sure people have a point of contact that's actually a person, and build that relationship. And obviously I'm available anytime if there's claims or problems, but that day-to-day need, having a great relationship with a very competent, trusted advisor, who handles that day-to-day is something that we provide, and, is something that's very important to us.
Yeah. Yeah. And the second thing was just, and I think it's part of why we're here and you're doing it as you're speaking, is just that education piece of it. Where I remember I was talking with somebody last year who was reviewing his umbrella, his wealth had changed, and he was considering like a $10 million umbrella policy. And his biggest thing was like, I don't necessarily mind paying it. I just want to know why, like why it's so much more expensive going from 5 to 10. And if someone could explain that to me, because I think, you'd probably agree, there's no necessarily silver bullet where something like this, hey, partnering with Charlie's going to get everyone's insurance costs and bring them down, right? I mean, the pricing is what it is. Your firm does a lot of research to find the most competitive prices where they can. But I know another part of what you do is just explaining to people why they're paying what they're paying.
Yeah, and price is an important thing, and I respect that. And our goal is to always provide the most efficient program. We're probably not always going to be the cheapest, but I want to make sure that if there's a claim, that our clients are provided the best service and actually get something for their value. Again, with insurance, you're just buying a piece of paper, right? And if you have no claims, buying the cheapest one was always the right answer, right? But the second there's a real claim, and frankly, most companies will pay a $6,000, pipe claim appropriately, but those aren't even necessarily claims that most clients should be putting in anymore, right? At this level. And what you really want to make sure is when there's a real problem, the hurricane, the fire, the wildfire, the litigation, the lawsuits. And in my experience, it's the litigation and the lawsuits, the umbrella, the liability piece, that's really the most stressful, the most impactful on people's lives, the most challenging, and the feeling that you have good counsel and that you're represented and knowing that you're going to be okay is a really big weight and something that becomes really important to people. I mean, getting sued is no fun, and having confidence that you're with a Chubb or a Pure or Berkeley, and that your panel counsel that's representing you has your best interest at heart, and that you have adequate limits. This horrible thing occurred, but knowing it's not going to ruin your life, ruin your family's life, ruin your kids' futures. And by the way, the cost was a few $1,000s a year, which hopefully we've just distributed from lower deductibles to higher deductibles, keeping your costs relatively flat. That's when I feel good about what we do. And I'm sure a lot of people don't think of insurance agents really helping, but I can tell you that's when I feel that way, is when there is that horrible scenario, when a client calls me and says, there's been an injury, potentially they're at fault. It was a car crash or a slip and fall or other crazy scenarios. And for me to say, hey, look, we got great insurance. You've got more than enough coverage to cover this. And within 24 hours, they're on the phone with their adjuster, who makes them feel good and makes them feel covered and protected, instead of making them feel like they don't know if they have coverage, or that there's potentially ambiguity, or that the feeling the insurance company is not going to try to help them. I mean, these are real things. And until you're sued or in that scenario, it's probably something you don't really appreciate. And part of our job is making sure that people think about that, because it happens. I see it. And I think that's the most important part of any insurance presentation, is the liability piece.
Yeah. And I think, when George called me after my presentation, I think what I heard from George saying, Kate, I think he actually said, he goes, Kate, what I heard you say is, Your job is to help us better protect the balance sheet. Our job is to grow the wealth and protect the bottom line. And your job is to help us put that wrapper around the bottom line. And really, that's kind of what the, risk management, it's about all of the balance sheet, right? And I think bringing Charlie in to get the right insurance structures in place, that's critical. It's, I always tell people, the amount people pay in insurance is minute compared to what it could be out of pocket if it's not there, right? And, I had an advisor friend call me up and he's like, thank you so much. And I, gave advice to him. I said, you need a really much larger umbrella than you think you have. His wife was in an accident in the Jewel parking lot, almost to the date of where a lawsuit couldn't be filed. She got a notice in the mail. $2 million. Jewel parking lot backing out of a space. The stress. And he's like, Kate, we're not that stressed. Our broker was right. We're with the right carrier. We're not worried. And I think, as I think about it, to me, that's why that partnership between McCabe and Charlie and his team at Epic is kind of I always say risk management takes a village, and this is the village.
Yeah, right. And I think you both highlighted, and Charlie, I'll throw back over to you, get back into your slides, but you bring up a good point about there's having the policy in place and making sure that's as up to date and as competitive as possible. But when something happens, having a team to then file the claim and make sure that's handled as efficiently as possible and making sure you have all your ducks in a row when you're handling that, that really on the back end probably gives people more peace of mind if they know they've got a team they can trust if something does happen. So I'm glad you highlighted that, because I think people are more concerned about what they're paying today versus what the process is going to look like if something does happen. So thanks for that.
And did you list that LLC on your policy? Did you remember to add that rental location to your umbrella? Even the best insurance companies won't pay claims if they don't have to. And you certainly want to be in a position of being organized and having things properly set up heading into the claim versus, kind of having to go beg Chubb, well, we didn't add that location, but, we should have. We're so sorry. Please pay the claim. We've been great clients. It's never the conversation. That's not the ideal way to attack these things. So, being, communicating, having that relationship, making sure things are set up in the proper way ahead of time, I totally agree. Important stuff here. And I'll jump back in here to the slides and just, for the sake of brevity, we'll try to keep it brief. There's only a few slides, to cover. So this won't be too long, I promise. But this slide is called State of the Personal Insurance Market. And really what this is sort of like, why is this something I need to pay attention to right now? And we've covered some of the liability stuff to consider, but the last 10 years, I'm sure you've noticed inflation and rate increases have become the norm. Illinois used to have some of the lowest insurance costs in the country. If you haven't checked, your insurance has doubled or tripled in the last 10 years, even if you have just a normal house in a normal suburb of Illinois. Inflation has become it's coming down, but was a real thing. Due to all the, a lot of hail issues were a major issue in Illinois and all sorts of weather problems across the country. I'm sure most of you are aware that wildfire in California inevitably impacts your home insurance premiums because the insurance for the insurance companies increases, and all these insurance companies buy reinsurance through the markets in London. Higher interest rates have led to higher costs. So it's not something you should just set and forget anymore. It's something you need to consider and just take a look at, because you need that proactive guidance, and rates are up, and it's worth exploring if you haven't looked at it in a while. I think there's some things that people don't really consider that are also worth talking through, and some of that is due to this inflation. If you've had some State Farm legacy policy and your house burned to the ground, have they done any analysis about what it would cost to rebuild it? The cost to rebuild in the 15 years I've been doing this in maybe longer, 17 years, went from $150 to $200 a square foot to it can be $1,000 a square foot to rebuild now. And if your policy hasn't been looked at in 10 years, you might be significantly underinsured on your rebuild cost. You might not have water backup coverage. Your roof might have a hail exclusion or a roof depreciation, which might make sense, by the way. It might be something you want to have, but it should be something you think through and strategize about instead of something that's imposed on you by the insurance companies. As homes age, thinking through what the replacement cost should be, thinking through improvements in your home, thinking through construction and builder's risk, all vacancies. Insurance companies have all sorts of language and exclusions around construction, vacancies, things that you need to consider and talk about with your broker. Flood insurance, for water backup coverage, when your sump pump fails is something that's sublimited heavily in the captive market. It's something that you're granted full coverage in traditionally in the independent channel with Chubb, Pure, Berkeley, making sure you have that coverage if you have a finished basement. Talking about flood coverage, earthquake coverage, and then a big missed topic is workers' compensation coverage. Do you have an employee working 30 hours a week? If you do, there might be a liability issue if you don't have workers' compensation for them. So if you have a nanny or a full-time helper. And then one thing I really like to focus on is technology. I think that's been a big shift in the industry in the last 5 or 10 years, and it continues to be. There's all sorts of technology you can use to prevent claims from ever happening. And that's sort of been, I think, instead of reacting to claims with sensors and alarms, sort of letting you know the claim is happening or the break-in is occurring or the water loss has already occurred. There's been a big shift in technology now, and the idea is to sort of make sure the claim never happens. And there's credits now out there that pay for themselves over time. Things like automatic water shutoffs in your house. I'm a huge believer in, especially for people who travel during the winter months or the summer months. Having that in your house can save your home and is a large credit. Generators. There's a device called Ting that's out now that you plug into an outlet and it's regularly searching for electrical issues. So even some of the things that don't generate large savings are really great risk control devices and can help you feel much more comfortable having a higher deductible. So a $25,000 deductible, you might feel very comfortable knowing that most of the companies we work with waive the deductible if there's a $100,000 loss or greater. And also knowing you have all these devices that help prevent the claim from ever occurring. So that's something I think that's really worth talking about and investigating with your broker or with us. I'm a big believer in it. This slide we sort of talked about is just the concept of social inflation is the idea that jury verdicts are becoming larger and larger, especially in liberal jurisdictions like Cook County, like Los Angeles, like, New York. And making sure you have the right umbrella to offset this risk that, a car accident can be $2, $5, $10 million now, where you didn't really see that 5 or 10 years ago. I think, making sure you don't have gaps in your coverage. This is a little technical, but you have to make sure that your primary policies have enough coverage that your umbrella fits on top of it. So if you have that Geico jet ski policy or that Geico auto insurance for your child in a different state, making sure that's reviewed and there's that connectivity to the umbrella is very important. The good companies cover exposures in social media, in cyberbullying, and things like that are emerging exposures. I think the biggest takeaway, though, is this one we call kind of emerging lifestyle risk bullet point here. And I want everyone to kind of think about this. There's all sorts of exposures that you have that you've probably not considered that you should consider. So you're on that not-for-profit, that charity board. Do they have directors and officers coverage? You have a nanny. Have you considered what if she sues for harassment or discrimination or wrongful termination? Cyber risk, making sure you're adequately protected if you're doing wire transfers in your personal life and it's wrong, or you send that mass email out, or you're hacked and your private information becomes public. A huge one, short-term rentals. Airbnb, are you Airbnb your home? If you are, there might be a very strict exclusion on your policy that we need to talk through and vet. Do you have a home business, a gallery? Are you selling things out of your house? Those are concerns and need some strategy. RVs, jet skis, and a big one, home construction. So many people in the last 10 years have remodeled, rebuilt, ground up construction, vetting your contractor, getting listed as an additional insured, making sure your insurance company knows it are critical things. So not to overwhelm you, but I'm guessing that most people who watch this are going to say to themselves like, wow, we're not really doing a lot of these things. And this is why having a relationship with me or someone like me or my firm is just, you know, it's just important. And I think my last thought before I just kind of pass it back to George and Kate is simply this. If you haven't dived into this and looked at it, this personal insurance space has become much more complex in the last 10 years. It's become much more nuanced. And you really, and you, as George and Kate have pointed out, have become more successful, more wealthy. And whether it's through us as a resource, there's no charge, there's no fee. We're thrilled to review anything and provide guidance and counseling, even if you want to maintain your current broker. But taking the time to go through the exercise has become very important. And I think it's a good use of your time, and our time to take a peek. And that's sort of and stop. That's as long as I can talk about insurance and anybody would listen. So I pass it back to George, but I just want to say lastly, thank you for the opportunity to talk to all of you today. And thank you to Kate and George. It's a big honor to have been selected amongst these 7 really high-end firms. It was a big honor. And, I really look forward to working together a long time with both of you. Thank you.
Charlie, I appreciate the comments, and I think people will have hopefully gotten a really good sense of who you are and how you operate just based on those comments. And the last thing you were talking about really reminded me, just going back to the review part of the process. All those things you listed are real things. They don't affect everybody. Like being on the board of a nonprofit, having a home business is so much more popular now after post COVID. People are giving up their lease spaces, working from home, jet skis, RVs. Probably doesn't affect all those don't affect everybody, but maybe there's one thing that speaks to a lot of people on this call. And I think the reason why they don't get addressed is, again, because people are only reviewing their policies like every 5 or 10 years. And if they start a home working from home, or they join a nonprofit and then they haven't reviewed their policy until like 3 years later, they don't think to bring that up. So like that annual review process of basically just saying like once a year, what's new? A lot of those things probably do get picked up because it's like every year you're thinking about you only have to think about what are the new things that have come up the last 12 months that I need to mention to Charlie. So I think that that's critical. And one last thing I just wanted to cover that I know is important to clients as we roll out these partnerships. And it's just like how when we invest money, clients ask us, well, are you investing your money similarly? People have asked myself and people have asked Tim that and all of our advisors that over the years. To me, it's the same thing with something like this property and casualty insurance. They're like, hey, I've listened to Kate and Charlie's comments. This seems important. Charlie's firm seems like a good fit, but like, George, are you using him for yourself? Like, have you gone through their process? Do you know what it looks like? And the answer to that is yes. And I think it was really important for both myself and my father, Tim, both went through Charlie's process of working with their firm, not only to get a sense of what it looked like, but to make sure that our own insurance policies were in a good place for both of our families. So I just want to highlight both my experience and then Tim's briefly, just because I think we're 2 different types of individuals. My experience may speak to some people on the call, and Tim's experience may speak to some of the more older retirees on the call, and just give you a sense of what that process looked like over a couple-minute period. Basically, I worked directly with Charlie's team, both Charlie and then his associate, Liliana. And essentially up front, we had to get my declaration pages together to get them over to their team, just so they can get a sense of what I currently had in place, what I didn't have in place. And what went along with that was they had a really nice questionnaire that just kind of thoroughly went through at a high level, like, everything I had in place, for myself. Some of the things that were pertinent was I had bought my first home last year, and we moved in there in the summer. And I went through the review process with Charlie in the fall. And so, we moved from renting in the city of Chicago to now owning a home. So we had a homeowner's policy through our quote unquote broker who I had never spoken to. And so there was a big question of like, do we have enough coverage? The things Charlie was talking about, like what's the replacement cost of our new home? How is the home titled and how is it, correspondingly our policy going to be titled? That was all really important stuff for us to cover. Essentially, Charlie's team looked at it. We came back together. One of the things I really liked about sitting down with Charlie was he basically presented me with a report that had three different options. So it wasn't just Charlie coming back to me and saying, like, I looked at this, this is the direction you're going to want to go. But he basically laid out, hey, there's a lot of different companies out there. I just want you to see what kind of the price differential is between company A and company C, and maybe some of the pros and cons of going with, option A, B, or C. And one of the things I found to be interesting, well, a couple things I would say. One is the company we ended up going with, and we essentially went from a situation where my wife and I had things unbundled. We didn't have them with one company, but at Charlie's behest, we thought it was a good idea to bundle. He had mentioned, hey, they're really competitive on price right now. But he was even looking ahead to say, you know what, but George, I'm anticipating that this company, they're probably due for a big price increase. So it's going to be important that we sit down in like a year from now, because I just know this company. And I think that that's something where even though they're really competitive right now, they may not be as competitive a year from now. So just having, again, that expertise and the foresight to say, like, this is where you should be today, but that may even change a year from now was crucial. Something else that was, I'm not going to say not insurance related, but was really important was our home. And when we bought our home, we placed it in the name of a trust. Okay. And something Charlie and I talked about was, well, our insurance policy, a lot of times people have those held just in their name individually. And so it was really important to make sure that the insurance policy was also held in the name of the trust. And I highlight that because I know that there's a lot of clients that I have that they will get their policies early on. And then later on in life, they'll either, move into a second home or they will buy, vacation properties. And they don't think to circle back and maybe change those policies and retitle them in the name of the trust. Because a lot of those people in their 30s or even early 40s don't have a trust written at that point in time. And yet they have, their insurance policies in place. When they write their trust later on, they don't think, hey, I got to circle back, and make sure my insurance matches that. So again, that was something that Charlie's firm caught that I think is really important that may not have been caught had I not worked with them. So those were some of the things I found really important in my experience. In Tim's experience, he's a little bit different. He's a, now retired, business owner who had recently exited out of his business. Some of the things I know were really important to him is that he has always lived in Illinois with my mom, but they changed residency to a new state. And as part of that, it was really important to say, hey, how do things change now that we're moving out of Illinois to this new state? And our primary home is not going to be in Illinois. And yet they still have a townhouse here in Illinois. So that was something that was kind of new to them. I know it was important to talk through with Charlie and his team is like, how do you deal with people that have properties across multiple state lines and how do those things interact with each other? And just, umbrella, again, somebody like him, not too dissimilar from clients of somebody who was, in business their entire career. Now they've exited out of the business. They're retired. Just reviewing, hey, do I have the correct coverage from an umbrella standpoint? And does how I look at that need to change now that I'm retired and not working anymore? So I could tell you going through that process, we found Charlie's team to be extremely responsive. They were able to pinpoint things that I think would normally slip through the cracks. And I've even had, a couple things I've gotten in the mail pop up. I've been able to get on the phone with their team after these policies have been in place to just say, can you explain to me what this is? And I know that we've got marked up for later on this year to take a look and review what we've got in place. So I will kind of wrap in my comments there, Charlie. And anything I missed as we were working together on my stuff and my dad's stuff last year.
No, I mean, I think that's really terrific. I guess one small point was just for your dad was the ability to have one point of contact for multi-states, a big thing for a bunch of people. I think you hit on that. But no, it's been great to work with you, and I very much appreciate the chance. George, you and your dad have been great to get to work with.
Perfect. And Kate, I was just going to wrap just kind of next steps for our clients if anyone's interested in this, but I certainly want to, open it up to you if you have any ending comments of things we didn't cover before I get to that.
No, I think you guys covered everything. It's been great.
Well, I appreciate both Kate and Charlie being here today, and thankful that we found Kate about a year ago to eventually connect Charlie and I. In terms of, I mentioned next steps. If anyone says, "Hey, I've listened in, and I think this is of interest to me," as Charlie mentioned, the first thing I would mention up front is this is a no strings attached, as I understand it. Charlie, correct me if I'm wrong. But really, this initial consultation, and for a lot of people, I think it's just reviewing current policies they have in place. There's no fee for that up front. Eventually, if you end up changing your policies or purchasing a new policy, Charlie's firm, like if every other business, gets compensated for that. But it's good to know that up front that, hey, I can sit down with George and Charlie and just get a sense of where I'm at. And if I decide not to make any changes or I don't need to make any changes, there's no big cost to me up front. But essentially what I think is a good idea, for people, they can always reach out to Charlie directly. Our company has their information. As many of you know, McCabe likes to be a liaison, during these relationships, because a lot of the decisions that, you and Charlie may be making as it relates to your insurance, McCabe needs to be aware of that. And as we think about your investment risk, we want to make sure that it lines up with, your insurance risk and how protected you are from that standpoint. So a lot of times I'll recommend to people, hey, if you want to reach out to myself or Ryan or Will or Zach or Julia to say, hey, I'm interested in sitting down with Charlie's firm, we can reach out on your behalf and just say, hey, Charlie, we've had someone reach out to us. Let me give you just a little bit of background on who they are, what they're looking for, what's important to them. We have a good sense working with clients for 10 plus years of the things that they value. And I think that's good context for Charlie to know before you even sit down. To say, hey, this is the things that I'll want to focus on during this meeting because of what George has told me. And really, I think having that intro meeting is a good start. And then kind of the steps that I've laid out for myself when I went through the process of collecting your declaration pages, getting it over to Charlie's firm, filling out their questionnaire, circling back, and then having that formal review, and then deciding if you want to make any changes. That's really what that step-by-step process looks like. So I'll just kind of end on that. We hope this was educational to everybody. And again, Kate and Charlie, thank you for joining me today. And just going to check the Q&A. I don't think we have any questions that came through. But if you have questions that come up after this podcast, please reach out to me and let me know, and we will make sure that we circle back with you. So thank you, everybody, for joining.
Thank you, everybody. Appreciate your time. Thank you. Thank you, Kate and George.